Are you thinking of hiring someone in your business? We first need to pump the brakes and go to W 2 or not to W 2, right? We need to understand this new relationship and if we'll be paying this person as a 1099 contractor or putting them on payroll as a genuine employee with a W 2. And the purpose of this video is today, I'll be breaking down the differences between each because it's important we get this categorization right on the front end because we don't want the IRS or our state taxing authority to come knocking on our door in a few years and hitting us with back taxes and penalties, which could amount to thousands, if not tens of thousands of dollars. Guys, hello, my name's Andrew D'Amico. I'm a CPA partner here allegedly alongside Mike Abrahamian, also CPA, the other partner here allegedly. Together, we provide our clients with tax saving strategies, asset protection strategies, and help them build generational wealth. If you like the idea of any of those three things, please make sure you're subscribing to this channel and get over to our Instagram as well, where we're constantly giving out free advice because we want to be a trusted source for you guys in this tax space. But enough about me. I want to get right to our whiteboard here. So you can see I have W-2 on the left, 1099 on the right. We need to understand the nature of each and what do they really mean. If we look at our left categories here, there's going to be income taxes, payroll taxes, benefits, and someone's going to be in control of this relationship. So when you're a W-2 employee, your employer will be withholding these income taxes for you. So employer withholds, whereas on the 1099 side, the employer is not giving you the time of day. They pay you $5,000 if you're a 1099, you're getting the full $5,000. If you're on payroll getting $5,000 a month, you get maybe 3,500, and then the other 1,500 is broken out between your share of payroll taxes, the federal income tax, state income tax withholdings, right? They're all doing this for you. The employer is on the W-2 side. If you're 1099, it's up to you, pal. So we'll say on contractor, right? It's their responsibility. Already running out of space. Excellent. Payroll taxes, I already alluded to it. That's your FICA. The employer is responsible for half of that, which amounts to about 7.65%. So your employer will pay, again, half. But when you're 1099, again, they're not doing this for you. When you're 1099, you're going to get that form. And then depending on your business structure, it could be ending up on a Schedule C. The point being, this is self-employment income, and you're going to have to pay both sides of the payroll tax called self-employment tax. And that's 15.3%, right? That's double this. And the responsibility is on you to pay your FICA, your Social Security, and your Medicare. Now, on to the benefits side of things. Likely, when you get in touch with a new company, you go on payroll, you're going to be eligible for some benefits. So if I spell eligible right, I don't think I did, but we can live with it. Over here, you are not getting benefits from whoever you're providing services for in that relationship. And ultimately, control. Your employer is going to have the control. And over here, the contractor has control, again, of this working relationship. Now, why did I take the time to draw this up? Well, because if you have a W-2 employee, you could see that there's additional hidden costs of hiring someone on payroll. You pay someone as a vendor, you don't have to pay their tax. You don't have to give them benefits, right? Cool. So in your head, you might be thinking, oh, I'll just funnel away my new employees as 1099, save myself a few bucks. Well, the IRS says you can't actually do that. You don't get the choice to choose if they're W-2 or 1099. It's based on your working relationship. To you, you might think, well, if I'm giving them $5,000, why does it matter if it's through payroll or if it's not? I know employees getting paid, the work's getting done, all is well and good, the skies are blue, the grass is green. Well, again, it's because the IRS wants to make sure they're getting their payroll taxes. And then especially if you're in an income tax state, the state's going to want their piece as well. This is a topic of discussion for all of our advisory clients when they're growing and scaling their business, talking about taking that next step. Hey, we need more hands. What's the best way to go about hiring them? Well, we'll kindly direct them to this video, but we go over a lot of things I'm about to. So let's get this down and let's make it make more sense with maybe some numbers. So now for, from comparative purposes, we'll keep up a W-2 column and a 1099 column. And we're going to give them a salary. We know there's going to be payroll taxes and it could be benefits in the picture. I'll also put in parentheses state considerations, things like workers' comp, state unemployment insurance, et cetera, et cetera. But that's going to vary based on your industry, what state you're in, and all those sorts of requirements. But let's take this for example. Let's say you're going to pay someone new to work in your business. You're going to give them $25,000 a year. Okay, great. That's going to be the same on either side, whether they're 1099 or W-2. That's not going to change. But what is going to change is these next few pieces, right? If they're a true 1099, then we're not, and this is from the employer's perspective, right? So us as the employer, we hire a vendor, we are not going to be paying their share of payroll taxes. We are not going to be giving them benefits, and we don't care about, all these other considerations. Maybe we do, but just for this example, let's say we don't. Payroll taxes, I said it's going to be 7.65%, right? I'm not going to drop the math, but based on $25,000, that's about 1,900. I want to say like 1912. And benefits and the whole state thing, again, it's going to vary, but a safe estimate would be like in total for this about 10% of that total salary is what it's going to cost the employer. So off of $25,000, what does that give us? 2,500. So over here, our total cost as the employer is $25,000, but over here it's going to be more like it's 29,412. So why would we subject ourselves to paying another $4,400 to put someone on payroll when we can just try and shuffle them through 1099 and save ourselves a couple grand? Well, if we try to get sneaky, then both the IRS and our state taxing authority will come back to us with penalties, and that's where the real cost of doing this incorrectly up front is going to cost you. So let's say, remember these two numbers. I'll leave this up for now just so we can remember what the total cost to us as the employer is. But now let's talk about penalties. We can have a failure to file forms like a W-2. Also, when we're the employer, it is our responsibility to withhold income taxes for our employees. So failure to withhold. And we could also be looking at any interest on unpaid payroll taxes. And then again, it's going to vary on industry and income tax state or not, but I'll just put state in there. Again, I'm not going to go over 40 income tax states. So let's just leave that as a line. But what could be the penalty amount? Depending on this failure to file, if it was intentional or if it was negligent, we can prove reasonable cause for not issuing a W-2, there's going to be a range. But the range is $60 to $630. And that is per form. And actually, I think you need some extra space up here. But just remember, this is our W-2. This is our 1099. But back to our penalties, that's per form. If we have a failure to withhold, and this is at the federal level, it could be up to 25% of the failed withholdings. So in our 25,000 salary person, let's say they wanted to withhold $5,000, 25% of that is $1,250. That's not nothing, my people. Currently, the IRS interest rate is at 7%. If you go to their website, they got a chart for the summer of 2025 when I'm recording this. It's 7% and it's compounded daily. And now let's apply some amounts to this to see what we're looking at. Let's say we're on the higher end of this. Let's say we're looking at 630 on the higher end. We intentionally disregarded it. In my hypothetical, they wanted 5,000 withholdings. That would be 1,250. And then 7% of our underpaid or not paid payroll taxes. Go back to the previous chart. That was about $1,900. If you do up the math on that, it's like 130-ish. We'll keep it simple here. But you could be talking close to $2,000 if I did my math right. We're talking about $2,000 in penalties and interest. And that's only the federal amounts. I haven't even done the state yet. The state's going to have their own withholding requirements, their own penalties and calculations as it comes to workers' comp, state unemployment insurance, etc., and even their interest rates. So it's not without the realm of possibility to think you could be looking at half of your federal penalties in state penalties, just as like a very baseline conservative guess. So, I mean, you put those two together, you could be looking at $3,000. That's going to be layered on to this. if you didn't put them on payroll. It's not like you can just pay them 1099 and then I'm going to get hit with interest and penalties. Okay, I guess I could pony up another $3,000. It's still only 28 versus 29,412. No, you're still going to have to pay this difference in whatever taxes you as the employer owed, and then you're going to have to pay the penalty. So instead of a total of 29, you're really looking at 32,412. All that to say, the W-2 versus 1099 is important to get right up front. Otherwise, we're opening ourselves up to a lot of exposure and begging the IRS or the state that we're in to come after us and nail us with interest and penalties, which I don't want for you guys, and you shouldn't want for yourselves, especially if you're rocking and rolling with a business. This is the last thing you want to deal with. So you might be saying, Andrew, that's great and all. I can see the potential risks and what I might owe. But seriously, how do I know if I should be treating someone as W-2 or 1099? Well, my friends, this is how you avoid such a scandal and or predicament. The IRS is going to look primarily at 3 tests, and it's all about control. Are you in a controlling relationship with your boyfriend or girlfriend, husband or wife? I mean, with your potential employees. They're going to look at your behavior as in, how is you, the employer, how are you acting, the financial, as well as the working relationship. And when I say the IRS is looking at 3 tests, the questions that they're asking at each line is behavior. Okay. Are you as the employer dictating what, when, where, and how they work? Financial, they're looking at pay structure. Are you telling this employee, yep, I'll give you $1,000 every 2 weeks? Or are they on the flip side coming to you and saying, hey, you give me $2,000 today. I'm going to bill you for $4,000 halfway through the project, and you're going to pay me another $4,000 when I finish. That's clearly in the contractor's realm, right? He's controlling. But if you're telling your employee, yeah, I'm going to pay you X amount every 2 weeks, then use the employer. And then other things financial wise, like tools, expenses. Are you the employer paying for these things, supplying these things, or is that contractor paying out of their own pocket? And then lastly, relationship. What's the working relationship like? Is it ongoing? Are they coming in for a day, or is their intent to, have a working relationship for the foreseeable future? Are you providing them benefits? Are you telling them when they could take off, giving them a vacation schedule? So after looking at these categories, if you're leaning towards the employer is in control of these situations, then that person should be getting a W-2. So it's great to know all these details and the tests and what the IRS is looking for. But you as a business owner, what we tell clients all the time is like, hey, let's take a step back and let's kind of use some common sense here. Do they work a regular schedule, 9 to 5, 4 days a week? Are you controlling their pay? Do you want them to be a part of your company for the years to come? Right? Think macro level, like, all right, this is a W-2 person. It really is. And then on the flip side, is this something you only need done once every few years and you just need a really highly skilled worker to do this for you and bang it out in a week or two or even a day? Like, okay, 1099, right? Just use a little bit of common sense. And if you have a CPA or a tax advisor that you know and trust, bring these questions to them and get this addressed beforehand so we don't have to go down the route of penalties, back taxes, interest, right? That was just a simple $25,000 salary example. But if you have multiple vendors that should be W-2, or you're paying even significant more amount, I know I calculated like $3,000 in penalties, but we start racking that up across multiple employees, this thing could get out of hand, which we want to avoid. So other best practices, if you're getting ready to bring on some W-2 people, don't do it yourself. Get in touch with a payroll provider, ADP, Gusto, Paychecks, an actual payroll provider who can help you navigate this landscape and understand what payments you need to make, where they're going, and how it works. And then if you do realize that, hey, these people are just 1099, make sure you're getting that W-9 up front. Check out the other video we recorded the other day about tracking for 1099s, because there's other penalties and considerations on that end as well if you're doing that. All this to say, hiring the wrong way could cost more than hiring the right person in the first place. If you're not sure, get in touch with us. These are things and conversations we have with small business owners every single day to help them stay IRS compliant and ultimately make sure that they're holding on to as many hard-earned dollars as they possibly can. Again, if you like tax saving strategies, asset protection, and want to build future generational wealth, subscribe to this channel. Please give us a like, shoot us your comments or questions, and we'd love to talk to you.